Good morning to all traders and welcome to today's market insights video provided to you by Orbex here. It is the Wednesday, it is the 18th of March. Today I decided to talk about FX miners. And the first one I want to talk is the Aussie against the Kiwi. We actually nearly seen the Kiwi becoming stronger than the Aussie yesterday. Just missed actually by 50 pips if I'm not mistaken. That seems to suggest that the Aussie is in trouble. It is, of course, widely affected by the coronavirus, way much more than the New Zealand is, because New Zealand is not as big a trading partner with China. It's also affected by demand in oil, falling, of course, then the tit for tat between the Russia and Saudi Arabia, with Saudi Arabia increasing the supply and oversupply in the market. The question is really who is really going to buy right now. Okay, people are indoors, that's correct. However, the US, could just literally decide to supply the US with crude. So what will this mean for the oil market? It's a different story. But back on the Aussie against the Kiwi. Yesterday we had the Australia really urging their people not to leave the country. So we're probably going to see the Aussie falling a bit further, and it's really hanging on what's really going to happen with China now. So once we start seeing the China peaking, then we should see the Australian dollar following as well. Now the other pair I wanted to look is the euro against the pound. We know what's happening with the pound. We know that the UK government has been criticized by their response, to the coronavirus outbreak. We're gonna see on the technicals what's happening, because I've also changed my mind there a little bit, because we've seen actually prices a little surging. I think we are around 92 or so level at the moment. We're expecting the European CPI and also the Canadian CPI today. And later in the session, overnight, nearly to some cases, we are expecting the New Zealand GDP figures, which actually might be exactly what is going to cause this break. Now, on the charts, as you can see, I see this as an impulsive move to the downside. We've had waves 1, 2 down. I'm expecting wave 3 to finish now. And I expect wave 3 to end below the previous low down here of 10018. Actually, we missed that yesterday just for a tiny bit, which seems to suggest that we are going to probably see wave 4 coming into play, and then wave 5 breaking that level, creating primary 3, correction to 4 for a potential retest up to that level, and then another move to the downside. It could be an ending triangle and then start shooting higher potentially, right? Now, the other scenario, of course, is that this is an ABC and we are going to see prices now bouncing off here. Then we are going most likely to revisit that level, right? And once we break below that level, we can have a false break below both of these prices. Actually, we get somewhere the triple bottom, and then that would be wave 5 in the intermediary degree, and it would also be wave C in the primary degree, and then we start looking for prices to move higher, right? However, I'm very, 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 very cautious with the Aussie, to be honest, because you can assume that China will start picking slowly, but the question is not just what's happening with China, it's just what happening now in the other countries. Because if China starts picking, it doesn't necessarily mean that the exports will increase, because nobody will import from China. All the countries around the world are at a stalemate. Yeah. Now on euro pound quickly. Euro pound, we talked about this ending move up here, right, the other day, but we're seeing this as an ABC, and we're looking ABC, and we're looking another ABC down here, right? So because we're expecting, at least for this correction, to take us down to the 81.25. Now we missed that, okay, because this correction came down to 82.80 or so. It is below wave 4 indeed. That's why we're looking at this actually coming a little bit lower down. However, the case now is that since we've had this correction down here, and we really crossed even the 78.6 up here, right? It looks like to me we're gonna head higher. If that is the case, now we need to really need to look what's happening in this zone over here, right? If we break above this level, we're going for wave 3. If we see some strength over here on this level and without taking the previous high, of course, then most likely looking for this to become an A. Then we're going to get a B wave up here, and then this is going to be a C, right? So this could be an expanded flat, or it could even be a running flat, right? Or at the end of the day, we can just have a deep correction and then continue lower, even for a zigzag, right? So we can still see that falling in the medium term. However, where I'm really hanging now is that. So pay attention to the 93.20. If we break above that level, I doubt this will be a false break, because that looks like it is a 5 rather than up here, right? So I will really pay attention to see whether prices are breaking above successfully the 93 level.